Hey, good evening, everybody. What's up? Now, the YouTube internets are giving me, it's saying we have audio issues. So if you guys could hear me, if the audio sounds good, just give me a thumbs up in the chat. I don't know why it's saying that. Let me see what it says here. It says the audio stream's current bit rate is 0. I'm not too sure how that's possible. Let me see.
I'm not playing.
Give me a second. Okay, you guys say it sounds good. Okay. Well, tonight we're going to be talking about a couple things, but I think I want to keep the focus on real estate, specifically as it relates to commercial real estate. We're starting to have a lot of gyrations and movements in the market, and I think a lot of big-time investors, and maybe even some small mom-and-pop investors, are going to have a real big opportunity to capitalize here. So we're going to be talking about some very big real estate companies, specifically ones that have a lot of gross exposure to the commercial space. Also, we have some news coming out of New York City, specifically down on 23rd Street. The Flatiron building just sold today in auction after the pretty funny and botched first auction, when the gentleman claimed he had enough money to buy it, and then he didn't even have enough money to make the earnest money deposit on it. But today it sold at auction for about $161 million. I believe the auction, or I should say the bidding, started at around $50 million. So I think in honor of the Flatiron building finding a new owner, we'll head down there tonight and check it out. Maybe some of you were actually at the auction today. Who knows? We'll also talk about commodities. We'll talk about the equity markets. Obviously, the S&P 500 and the NASDAQ fell under pressure. Both major indices down over 1% today. Let me go ahead and close up my laptop here, and we will get started. I'll say hello to some people in the chat. I see Gary Carpenter. Good to see you. Sunshine After Rain. Abdullah is here. Richard Vogel, Star Fox, Oscar Diaz. Good to see everybody. Hopefully you all had a good weekend. It is Tuesday. Now, we also have some big news coming out of some major semiconductor companies. And if you remember correctly, one of the main themes that we've been following here on the live stream is a lot of reshoring from, let's say, Asia, specifically China, bringing back manufacturing capacity to the United States, specifically as it relates to a lot of the semiconductor manufacturing. Now, if there's one thing that the COVID pandemic really taught us, it's that, I should say, the West in general really needs to diversify and fortify their supply chains, right? So if one part of the world goes down, that doesn't totally, set us back 2 to 3 years, which is pretty much what the COVID-19 pandemic has done. So Applied Materials, big news, ticker symbol AMAT. They came out with some news today. They're announcing that they are going to be investing almost $4 billion into building a brand new facility in California, bringing back those manufacturing infrastructure capacity and jobs to the United States. So we'll talk about that as well. Brick Stonewall is here. Good to see you. We're starting off the live stream tonight at Columbus Circle, 59th Street. You can see 220 Central Park South here, as well as 157 and the Steinway building. Let's make our way down Broadway tonight. Hold on, let me put down the camera for a second. Now, Columbus Circle is always really busy, especially are here and hanging out. So let me put on my suitcase or briefcase, whatever you call it. But yeah, there's a new owner for the Flatiron, which is good news. Let's just get out of here for a moment. Hey, Colleen is here. Good to see you, Colleen. Austin City Limits, welcome. Yeah, Mackler versus Apple and Broadcom deal too. Now, speaking of semiconductors, I think tomorrow is really going to be the big day on Wall Street as it relates to semis, right? We have probably, it's going to be the biggest market mover tomorrow by far, NVIDIA. NVIDIA is reporting earnings, I believe, tomorrow after the bell. Now, if you look at that website that I showed you guys before, real quick, I'll just show you this is One Central Park West. This is also known as the Trump International Hotel and Tower, but right next to it is 15 Central Park West. Very notable building here in New York City, particularly on Central Park West. It is home to former Wall Street mega bank CEO Lloyd Blankfein. A lot of other private equity guys and girls live in that building. As we turn over here, this is Deutsche Bank Tower, I should say, formerly known as the Time Warner Center. Now, speaking of commercial real estate, which we're going to have pretty in-depth conversation about tonight, and we've been talking about it for a while. Vacancy rates are climbing again, particularly in the commercial space in Lower Manhattan. Now, if you've been watching Walks in Wall Street, we've been really focusing and hammering on this and talking about it for quite some time. Now, for those of you who may be new here and those of you who may not know, I actually spent the vast majority, well, I shouldn't say that, maybe like half my career working downtown on Wall Street, the physical street. Our building was literally right next door to the old Deutsche Bank. And now that huge building, maybe I'll take you guys down there tomorrow, it's completely empty, right? It's right across the street from that, I think it's the Cipriani. I always pronounce it wrong, but you guys get the picture. So you have all of these vacant office buildings in Lower Manhattan. Deutsche Bank just added their building to the list. They migrated up here to Columbus Circle, and you could just see that a lot of this stuff is, you know, migrating away from the older buildings that were built in the 70s and 80s and even before. And you have this big flight to quality in these Class A office buildings. Now, if you've ever been in the Time Warner Center, now called the Deutsche Bank Tower, you'll sort of see why. It's really beautiful in there. There's shops, there's restaurants. It's just a more inviting and welcoming place for your employees to work. And to be honest, it's just more convenient as well. So, you know, just take a look at some of the stock tickers, particularly some of the stocks that have really big exposure to commercial real estate. I think this is a nice shot for you guys right down here on Broadway. Hey, RJ, what's up? Says Ola Tom from Colorado. Good to see you. NG says, I love how my comments get lost in the sauce since there's so many people in the chat now. I try to get to everybody. NG, it's good to see you though. It's good to be back. 57th Street and Broadway. Now, I want you guys to take a look at a couple stock tickers because this is just pretty incredible stuff. First one up, ticker symbol SLG. Now, if you have a Bloomberg Terminal, TradingView, or MarketSmith, or really however you look at your stock charts, I want you to zoom out on a monthly time frame, okay? And it's really breathtaking to look at some of these charts of these commercial real estate REITs, right? So the REIT acronym stands for Real Estate Investment Trust, and if you look at ticker symbol SLG, which is a New York-based company, by the way, based out of New York, the thing's trading at 23 bucks. That's almost the exact price that it IPO'd, if you could believe that. Kind of crazy. Right in front of us is 432 Park Avenue. We're actually standing directly outside of Central Park Tower. This is actually the main entrance right here. So Central Park Tower is literally inside the Nordstrom building, so 225 West 57th Street. Let me try to adjust my brightness here. Hey, Brad's Brain, what's up? I see Carol S. Good to see you, Carol. Thank you for joining us. Brad's Brain says, hey, Tom and everybody, good to see you. Likewise, my friend, hopefully all is well in your neck of the woods. Robert Parker says, many buildings are still vacant since the pandemic and have never opened. Why is that? Is that the center of the subject? Well, I mean, I guess it's a little bit of the subject, right? Now, I think what caught a lot of people off guard is everybody was saying that this real estate crisis is going to be like 2008 all over again. But it's funny because residential real estate generally, right, generally speaking, is actually holding up rather well. And rents are still near all-time record highs on the residential side. But on the commercial side, it's pretty close to Armageddon. In my view, because what you also have to keep in mind, everybody, and think about is who has the exposure to commercial real estate, or I should say who has the most exposure in terms of the financial sector, right? This is the Brooklyn Diner. Again, we are right on West 57th Street. This is Billionaires Row. Right adjacent from us is actually the Carnegie Hall. Now, unfortunately, there's all this scaffolding up here. I'm not too sure when they're going to take it down, but I can't wait until it's taken down because Carnegie Hall is probably one of the greatest attractions to New York, and I haven't really been able to show you guys on the live stream because it's been covered in this sort of nasty looking scaffolding, sort of story of New York City's life, scaffolding all over the place. But to sort of get back on track, if you sort of follow the money and understand who has the most exposure to a lot of the debt that is backing a lot of the commercial real estate, it's the regional banks. It leads you to the regional banks. And I mean, if you haven't been living under a rock for the past, I don't know, maybe 2 months, we've been having a lot of problems in the regional banking sector, right? We've been having bank runs and the like, starting off with Silicon Valley Bank, spurring contagion into other regional banks. And a big part of that is because of the exposure to commercial real estate. Now, I wanted to actually take you guys uptown real quick, just like for a block or two. I want to show you Alwyn Court. Alwyn Court is one of my favorite buildings in New York. It's right across the street from the New York Athletic Club. But as a quick review, right, with the Silicon Valley banking collapse, if we just want to review it really quick, during 2021, this was when there was massive amounts of fiscal and monetary stimulus flooding the market, right? Interest rates were near zero because the Federal Reserve had to cut rates due to the COVID pandemic to spur economic activity. But with so much, I think we could say in hindsight that we pretty much overdid it, right? One of the sectors in the economy that benefited a lot from this economic stimulus and economic activity from the federal government and the Federal Reserve, so monetary policy and fiscal policy, was venture capital, right? Tons of money went into venture capital, or VC. And one of the main banks, or I should say the bank, that pretty much banked all of these venture capital firms and their startups was, you guessed it, Silicon Valley Bank. This is the Alwyn Court. Let me try to move away from the light so you guys can see the architecture on this building. It's really, really beautiful. You can sort of see the contrast between the old New York and the new. So you have Alwyn Court here. And then if you continue to point the camera up, that's Billionaires Row 157, which is an Extel development. That's actually the first building on New York City's Billionaires Row. But you still keep the old architecture that is, I think, classic and timeless to New York, which is really beautiful. Alwyn Court here. So anyway, you know, a lot of that money, right, that was deposited at Silicon Valley Bank, since there was such a boom in venture capital, most people, right, that aren't savvy in the financial markets and who aren't paying attention all the time, they would think that bank deposits are actually assets to the bank, but they're not. When you go and deposit money at a bank, that's actually a liability to the bank, right? It's kind of an interesting concept, but it's true. When I go and deposit money in, say, JP Morgan Chase, that is a liability to the bank because they have a liability to give me back that money. So in the fractional reserve banking system that we live in, when people deposit money at the bank, it doesn't just sit at the bank. It has to be loaned out to other people or other customers, in which case the bank makes yield or interest on that, or it gets invested in quote-unquote safe investments such as mortgage-backed securities, US Treasuries, and the like. Now here's the problem. Silicon Valley Bank had a huge influx of, I think, about $90 billion, something crazy. So that is a huge amount of liability to take on all at once. So they pile drove all of that money, or quite a bit of it, into mortgage-backed security, 10-year duration mortgage-backed securities at a very, very, very low interest rate, right? Because, you know, a lot of the mortgage-backed securities on the market in 2021, I mean, the yields on them were next to nothing, almost laughable in a way. So when you buy $90 or $80 billion worth of MBS mortgage-backed securities, when interest rates are near zero, if you fast forward to 2022 and now 2023, we understand that the Federal Reserve raised interest rates by the tune of 500 basis points. So if we understand the correlation between bond prices and yields, as bond yields go up, bond prices get crushed. So that $80 billion that Silicon Valley Bank purchased worth of mortgage-backed securities at very low interest rates, when those rates ballooned, right, because we are in the most aggressive interest rate hiking cycle since Volcker, the value of those mortgage-backed security holdings cratered. And they're probably trading at the time, 50 cents on the dollar, right? So mark-to-market accounting, the banks are really badly underwater on their investments in mortgage-backed securities, and that's the same exact thing that we could see with a lot of these regional banks that have really big exposure to the commercial real estate sector. So again, this is Alwyn Court. I'll quickly do one more pass by the front door for you guys. I mean, this is just really an amazing building. I know it's dark out and it doesn't do it justice. So if you want to go on Google Maps, or if you click the link in the description, on my Twitter, I put up a couple of videos of this building. It is 180 West 58th Street. And the architecture is really amazing here. I'll try to get you a closer look. There's some pretty interesting details here. This is one of these buildings that every time I pass it in New York, I see a different detail every single time. Hey, Richard Vogel is here, says love the building. Ed T, what's up, Ed? Thank you for joining us. Let me see if I can focus in on this. So Alwyn Court Apartments, built in 1907 and 1909. Really unbelievable. Hey, Julia M is here. Says, hey everyone, and Tom. Julia, are you in Miami now, right? Now, I could have sworn I walked past here today and there was some sort of dragon thing. I can't find it. There's so much interesting stuff that I can't even see it anymore, but I think you guys get the picture. So if you ever come to New York, I want you guys to come here during the day, preferably, because you can see a little bit more and appreciate the architecture more. But if you want to come here yourself, it's on the corner of West 57th Street and 7th Avenue. And again, you have all these bars across the street, the original buildings here in New York. And check this out. That's Central Park Tower, and the building to the right is 220 Central Park South. So really big diversity in the buildings here. Hey, I think I see my friend Hawaii here. What's up? Says aloha, Tom, and everybody. Working and listening on and off, so can't really chat today, just stopping by. Hopefully work is going well for you. And hopefully the weather's a little bit better than the weather here in New York. Now, it's May 23rd, if you could believe that. It's almost June. Think about that, guys. It's almost June, and it's hot in New York. It's actually like this guy over here. But this is Carnegie Hall. Hey, TD, Teresa Diaz is here. Welcome. Good to see you. Brick stone wall. It says, I own a couple of rental homes, but I'm very careful about losing a tenant right now if I raise my rent. I mean, it's very uncertain times. Which market are you in, if you don't mind us asking? Hey, Andre Brown, what's up? This is hello, everybody. Andre, long time no see. Hopefully you're doing well, man. Thank you for joining us on this kind of chilly night and windy night in New York. We're walking down 57th Street. We're about to pass the front entrance of 157. Now, the left awning that you see, or I should say the first awning, is actually the residential buildings or the apartments. But the second awning is actually the hotel, which is the Park Hyatt Hotel. Hyatt is a publicly traded company. They trade under the ticker symbol H, which they just reported earnings last week, or I should say 2 weeks ago now. And the building is right across the street from the very famous Russian Tea Room, which is really gorgeous inside. Hey, Gopher, good to see you, welcome. Kings, his wonderful, informative walk as usual. Good to see you, Kings. Sparks Carnival says Toll Brothers reported better than expected second quarter profits and revenue. Hey, Frank, thank you so much for your very kind and generous $20 donation. I appreciate it very, very much, and thank you for supporting the stream. I'll give you guys one more look at the front of 157. Now, if I zoom in over here, they don't really allow filming, so I'm not going to be a menace. But this is a Forbes 5-star hotel. The amenities in this building are absolutely unbelievable. They have a saltwater pool. The second floor, which you can kind of see right here, this is the bar and restaurant. It's actually called the living room. Now, you don't need to be a guest or a resident, or I should say a tenant of 157 to visit the bar and grill, and it is really good. So if you actually just want to take a client out or just experience dining at 157 on Billionaires Row yourself, you can do that. All you got to do is walk in this entrance, walk all the way to the back, take the elevator to floor 2, and right here is the bar and grill. It's called the living room. It's actually really, really good. Now again, this is the first building ever built on Billionaires Row. The developer was Xtel. It's the same developer that built this building, Central Park Tower. Hey, Haas Manning says, good evening, everybody. The homes inside 157 are absolutely beautiful. They really are. And, you know, to Haas Manning's point, my friend just sent me a listing on Friday. So there was actually a very notable unit that just went under contract in that very building that I was just showing you guys on Friday, but it was a rental. And the rent was $125,000. And it just went under contract on Friday. So imagine that. I mean, $125,000 a month rental. I mean, to move in there, you need first month, last month, security deposit. I mean, that's some big stuff. Now, I think if I ever had that much money to be able to drop $125,000 a month on rent, I think I'd probably just buy one of the units in there, right? Now, funny enough, I don't think it's Ackman's unit that they rented. I think it's actually on a little bit of a lower floor, but the thing is fully staged, it's fully furnished, and it looks great. Speaking of hotels and hospitality, that is the Essex House. That is the JW Marriott Essex House, right on Central Park South. And this is 111 West 57th Street here. Hey, Gregory's here. What's up, Gregory? Good to see you. Thank you for joining us and welcome. We were just talking about the vacancy rates in Manhattan. We were talking about the exposure that a lot of these regional banks have to commercial real estate, but I think there's going to be a pretty massive opportunity here because these things are going to sell for pennies on the dollar. And a lot of this debt, right, a lot of this debt in the commercial space over the next 24 months is going to need to be refinanced. Now, this poses a problem for obvious reasons, right? If you rewind, 10 minutes ago when we were looking at Alwyn Court, we were sort of explaining the Silicon Valley banking debacle, right? Really why they went under and got in such trouble, because they were buying massive amounts of very safe mortgage-backed securities, but at very, very low interest rates. So a lot of those deals, right, especially in the commercial space, are going to need to be refinanced. Now, you have a double whammy happening here, because when this debt gets refinanced, it's obviously not going to be at the ridiculously low interest rates we had in 2021. It's going to be at extremely high interest rates. Now, if you want to talk about the residential market, I think as of today, as of doing this video, the average 30-year fixed rate mortgage, yet again, is at a 7 handle, right? That's about a 50 basis point move in 2 weeks. That's pretty big stuff. That's pretty major, right? So you could only imagine what that debt is like on different types of loans. Commercial loans, construction loans, it could be way more than that. So that's really going to freeze up and lock up the system, in my opinion. And the second part to the double whammy, which is really painstakingly nerve-wracking, at least to me, is the vacancy is at an all-time record high. Think about that. So you have vacancy in Manhattan, not just in Manhattan, other cities across the United States like San Francisco, at all-time record highs. So things are sitting empty, and they have to refinance their debt, and the debt is going to cost like 200% more than it did 2 years ago. So that's a problem. He was one of the greatest real estate investors of all time, and the way he really made his money is through distressed sales, distressed investing. So my prediction is this, as I give you guys one more quick shot of Billionaires Row. I think over the next 5 years, right, because a lot of this stuff is going to be refinanced and a lot of these deals are going to go bust, there's going to be massive opportunity in commercial real estate. Now, the argument here is, well, Tom, even if these properties sell for pennies on the dollar, nobody's going back to the office. Okay, true, I understand that. But if they're sold at a low enough price, if these things even trade, right, maybe they could be repurposed for something. I know that is very capital intensive and very labor intensive, but maybe they could be repurposed for something. And even if they do sell at extremely, extremely low valuations, which they will, by the way, they're going to. It's not if, it's when. And it's already happening. We talked about two particular companies. We'll touch on them again. I think that would actually entice some of the bigger companies, or maybe even some small to medium-sized business, or SMBs, to dip their toe in the market again and get a really good deal on a lease. Now, phase one was all of these big companies, right? Meta, from all the tech companies like Amazon, Microsoft, you name it, and from the banking sector too, like JP Chase. Jamie Dimon and JP Chase shed about 20% of their whole office holdings, or I should say of their square footage in Manhattan. I think they're out of Lower Manhattan, they're out of Queens, and they're consolidating into, guess what? Class A prime office space, which just so happens to be their own. And that is, I think, 270 Park Avenue, I believe, which we may have time to check out today. So you're going to have a lot of this stuff pretty much be sold off as distressed sales. and that could provide some pretty lucrative opportunities. All right, this is the corner of 5th Avenue and 57th Street. We are looking at Louis Vuitton building here. Let me catch up on some of the comments. GE's earnings report from the hospitality sector are very impressive. They really have been very impressive. I agree with you. Now, today was actually a pretty bad day for the luxury sector, the luxury market. I think LVMH was down like 6%. And everybody's trying to figure out a reason why these things were down so much today. But, I mean, these stocks sometimes there doesn't really need to be a reason, right? It seems like every time you check the ticker LVMH or any of these big luxury brands, it's just been like a straight line, like a hockey stick chart from bottom left to top right. So I think these things need to give back a little bit. I think you could say the same thing about a lot of those beauty stocks too, like e.l.f. And Ulta Beauty too. Yeah, Sparks Carnival, I saw that Visa did crash 3% today. TCS is possibly not good news for WeWork. You know, where is WeWork stock trading at? I think WeWork stock is trading at like 50 cents, if you can believe that, which is kind of crazy. Now, speaking of hospitality, everybody, this is the hotel that we were talking about. I think it's called Aman, A-M-A-N. And prices start at $2,000 a night, if you could believe that. But people are paying it. We just saw a group of gentlemen walk in there right now. They were actually following us the whole time. They came out of 157 and took a right into the Aman. I think that's how you pronounce it. Hey, Abdul is here. Good to see you. Welcome. Yeah, Sparks Carnival says he lost $11.2 billion today alone. You know, those are always like really eye-popping and eye-grabbing headlines. Now, Sparks Carnival, I know you understand and we all understand here, but I think a lot of people, and I really do mean this, you know, when Tesla stock really started to tank and really started to crash, because Tesla is in a really egregious downtrend. You know, almost every day in the news, from CNBC to Bloomberg to the Financial Times, it'd say Elon Musk loses $10 billion today alone. I think the vast majority of people out there literally physically think like they're losing like that in a cash amount, right? And I think that's a really big misconception. Now, probably everybody on here knows, this is like the valuation of their stock. But somebody sent me this really hilarious video. I think it was a Bernie Sanders rally. And I got nothing wrong with Bernie Sanders, right? We may differ politically, but I don't think he's a bad guy. But people at the rally were sort of saying that, Elon Musk, worth 80 billion, Microsoft, Bill Gates, same thing, 80 billion. And they literally think like these people have that in cash, like the cash is just sitting in the bank account. These people are actually probably relatively illiquid, which a lot of people I think don't recognize that and don't understand that. Some of the richest people on earth, on a relative basis, actually are illiquid. Now, they're probably a lot more liquid than like me and you, but on a relative basis, they have the vast majority of their net worth tied up in their assets of either their business, company stock, or real estate. So it's not just like these people have, $80 billion of cash sitting in a checking account, right? Hey, J49 says, does a $1 trillion coin exist? Oh, I don't know. But yeah, we have that to worry about too, guys. The debt ceiling debacle. But do we have any updates on that? I actually haven't even been following it at all today, because my prediction about the debt ceiling. It's that it's going to come down to the wire, and then we're just going to raise it, and we're not going to decrease government spending at all. We're just going to continue to acquire debt and spend in perpetuity. That's my thesis. That's my thought. This is the St. Regis. Speaking of hospitality and really nice hotels, the beautiful, the classic St. Regis. Hey Tiffany, good to see you. Thank you so much. Michael Joseph, I did see that interview with David Faber. You know, funny story, I'll tell you guys, it's not really a funny story, but I would watch that interview with David Faber and Elon Musk. I thought it was really good. I actually met David Faber right over here, walking up Park Avenue. Nice guy, I said hello to him. I think we'll, I really want to head to the Flatiron building today, everybody, now that we're on the topic of real estate. It was a very historic day today in Manhattan for New Yorkers and just for New York City real estate in general. I think it's a very historic day. So the Flatiron building, which is on 23rd Street, very close to Madison Square Park. I'm going to try not to get distracted so we could head down there and actually make it on time. But the Flatiron building sold at auction today for $161 million. And the bidding started, I believe, at $50 million. Now, if you remember correctly, I believe about a month ago, the Flatiron building went to auction. And there was a gentleman, nobody really knew about him, nobody really knew his name. I think he owned a very small real estate investment firm based in New York, I think. And he won the bid. Now the problem is he never put down the $20 million deposit. It never came. So the Flatiron building went back on the market, went back on auction today, which is May 23rd, and it finally has an owner for $161 million. This is the Peninsula Hotel. TC says, is that price considered cheap or expensive? Well, I don't know. And that's my serious answer is I don't know. Because what did we just review for the last 30 minutes here on the stream? Well, these are really beautiful, guys. Look at this. I think they're having these all up and down Fifth Avenue. Absolutely gorgeous. Now, here's the thing. Manhattan commercial real estate vacancies are at an all-time record high, and we know the trend is that the commercial real estate that's moving and the leases that are happening are on Class A brand new properties, right? Like 425 Park Avenue, like everything at the Hudson Yards. That is what's moving. So the Flatiron building, even though it's gorgeous, it's beautiful, it's a New York icon, it's a staple in Manhattan, it's in a little bit of an awkward layout. Everything is super narrow. I think they only had one retail tenant, and I think the one retail tenant that they have is T-Mobile. It was actually formerly Sprint. It was a retail store, and everything else was vacant. So, in my view, in order for that deal to be profitable, you're probably going to have to turn it into some sort of like a trendy hotel. I don't know. I mean, would you guys rent an office space in the Flatiron? With the way people work now, right? At my previous company and 2 companies ago, all of our office space was very wide open. It's almost like everything is a big, wide open floor plan. And the Flatiron building is not that. The Flatiron building, the layouts are very awkward. It's very narrow. Ceiling heights are low. So I don't know, I think there's gonna need to be a lot of money that goes into that. But I'm not saying it's a bad building. I mean, it's an absolute New York icon. I don't know, what do you guys think? Do you think they're probably just gonna repurpose it for hotels or maybe even residential units and then sell those residential units or maybe even rent them? I don't know. G says, I'd easily turn that into a luxury hotel. Don't Be Evil says it's definitely going to be converted into condominiums. Perhaps. You know, for the right price, I mean, if there was a 1-bedroom apartment in the Flatiron building for $3,000, I'd rent that. I mean, think about that. To say, hey, I live in the Flatiron building, I think that's kind of unique. Now, the building that you're looking at right now, speaking of uniqueness, this is St. Thomas Church. Now, if you want to visit St. Thomas Church yourself and look at the amazing architecture on the building, All you got to do is come to East 53rd Street and 5th Avenue. It's one of my favorite buildings in the city, just a couple blocks up from St. Patrick's Cathedral. And the architecture here is really beautiful. Michael Joseph's is the Flatiron, is the original famous building like the Empire State Building. TC says, I think they will repurpose it. Already too much vacant commercial real estate in Manhattan. Agreed. Now, did I tell you guys this? I forget. We haven't done the live streams on a consistent basis in a while, but we're about to walk past Rockefeller Center.
Tell the American public that's what this is about, little nigga.
And we walked past Rockefeller Center a couple days ago, and we're going to walk past it again. If you look right above the Today Show studio, all of that commercial space is totally vacant. And it kind of looks awkward because you could actually see into the building and everything is totally blown out, everything is totally vacant above the Today Show. And they're actually going to convert that portion into luxury hotels. I think it's going to be a 134 unit luxury hotel. I forget the name, but if you want to Google it, I believe it is one of the hotel chains that is very big and very prominent in Aspen, Colorado, for like a lot of the ski towns. I think that's the developer, but I forget the name. So I agree, but then here's the thing. How many luxury hotels can you have in the city before you just start getting, I don't know. Well, not to get political, but a lot of the hotels in the city, everybody, and this is actually one of the reasons, and again, I don't want to get political with it, but we're talking real estate, so I think it's appropriate to say it. One of the reasons why hotel prices right now in Manhattan, in terms of room rates, are so high still, is because there's actually relatively low vacancy at hotels across the city, because the city is paying millions of dollars to house migrants and the like. So you sort of have another variable there that's actually keeping a lot of those hotel vacancies very low. So here's my worry. Here's my one worry. I'll show you guys some of the flowers again. I'll give you a shot. This is actually right outside of the Versace building. Speaking of vacant commercial space, the Versace building is no more. They're moving it, but this is incredible. I never in a million years would have thought Versace would have closed down their 5th Avenue flagship store, which, by the way, is right next to Cartier. We almost totally passed it. Let me take a step back and show you guys. So this is the Cartier store. So we passed Tiffany, we passed Louis Vuitton. 3 weeks ago, there was a cover story in the Wall Street Journal. I would highly advise you to read that cover story. So the owner of LVMH, Moet Hennessy, purchased Tiffany, the jewelry store, which was a failing brand at the time. Well, relatively, their sales were in decline. They bought it, revamped the brand. It's unbelievable now. They totally gut renovated the flagship building on 5th Avenue. They were going to buy and make a bid for Cartier. The problem is it's not for sale. So if you ever in the future hear any rumblings about deal flow or deal activity as it relates to LVMH Moet Hennessy purchasing Cartier, well, you know where you heard it first. That Wall Street Journal cover story about 2 weeks ago. They were interviewing the CEO and they said, if there's one luxury brand that you could purchase today, what would it be? And he would say 100% it would be Cartier, but unfortunately it's not for sale. And I think it is a great luxury brand. But here's the Versace store, totally out. They even have the very famous, what is it called? The Medusa head logo right on the front, and it is out of business. Now, to be fair, they're moving it to Madison Avenue, but I'm not too sure where. Let me see if I can get the camera close enough so you guys can see inside. I don't think I'm going to be able to do it. It's a shame, because the inside actually looks really, really cool. Yeah, they made sure they white everything out, unfortunately, but yeah, this is just, another example of some very sought after retail space here in Manhattan becoming vacant. Now I would say the Upper East Side, sorry, I'm just trying to adjust the microphone. We actually did a walking tour of the Upper East Side, I'd say about a month ago. And I love the Upper East Side, okay? I like the Upper West Side better, but I love the Upper East Side. But what was our one takeaway, team? What would you say was the big takeaway from our walk on the Upper East Side? And I'm not trying to be negative. I'm an eternal optimist, but I mean, we got to tell the truth. I mean, the amount of vacancy in terms of retail storefront on the Upper East Side was just almost breathtaking. Almost every single retail storefront on the Upper East Side is for lease. It's vacant. Except a very few select amount of very high-end name brands. So I don't know. Now, getting back on track, I quickly want to show you the St. Patrick's Cathedral, but I also want to bring about something that may be of worry. So we know that there's a ton of hotels going up in Manhattan, or plans for new hotels going up in Manhattan. But again, not to get political, I think the city paying for all of these hotel rooms is maybe putting a little bit of artificial demand in the picture. Because I think this, once this immigration crisis is sorted out and all these people can get their papers and they could work and, they could earn money and they don't have to be in these hotels, those are going to be vacant. And then you're building all of these other hotels that are coming on the market in Manhattan. In 3 to 5 years, we could have a very different story in terms of hotel vacancy in Manhattan, right? Just because there's going to be so much supply on the market. Now, maybe that's a little bit of a stretch, and I get that. But if I was a developer or an investor and I'm looking at one of these, like a deal book or a pitch deck for a hotel in Manhattan, they are running those numbers right now on current vacancy rates in Manhattan. And I think a lot of them may be oblivious as to the city's program right now of writing big checks to these hotels to house different migrants, right? Again, not saying it's right or wrong to do that, just talking about it as an investment perspective. This is the main front door of the St. Patrick's Cathedral here. Really beautiful stuff. Look at the detail. Huge cast iron doors. Really fantastic stuff. And I think these are all real flowers. Let's see. I'm gonna try to get the camera to focus. Oh no, they're not. They're not real. Anyway, it still looks good though. Steve CR, I know. But Steve, sometimes, people flame me in my email box. Hey, MBA Elias, good to see you, sir. Thank you for joining us. Appreciate it. All right, let's continue on because we got to reach the Flatiron building tonight. Now, I want to talk about the bond market. I want to talk about the bond market because the bond market and interest rates is pretty much real estate, right? We talked about this before. The debt market or the bond market is essentially setting the price of money, right? So interest rates are literally the price of money. So let's take a look at the yield curve a little bit and let's sort of talk about where rates are right now, where they may be headed, and maybe make a couple of predictions. Susanna Q4 says, I hope there is more availability sooner than later in Manhattan with affordable prices. I do too. I mean, not to sort of go back on that subject, but you look at some of these hotels like the Park Hyatt, the Peninsula, all these other ones, these big 5-star hotels, these are like $1,000 rooms per night. I mean, even if that could drop to like, $600, $700, that means all the other, maybe 3- and 4-star hotels in Manhattan could be $100 a night. That would be a deal and a half, deal of the century. But anyway, so the average 30-year fixed rate mortgage, if we want to sort of pivot to residential real estate right now, is back at a 7 handle. So the average 30-year fixed rate mortgage right now, according to cnbc.com/bonds, is 7.03%. And the US 10-year treasury yield, right, if we want to talk about sovereign bonds for a minute, or treasuries, the 10-year US Treasury is at 3.694%, and the 2-year is at 4.258%. And if we go down the curve a little bit more to the 1-year, we are now at a 5 handle on the 1-year US Treasury, 5.083%. So, what does this mean for, put your portfolio manager cap on. Think about it if you were an institutional investor or a portfolio manager here. And I think that this is really relevant, okay? Think about it from a perspective of risk. If you're a real estate investor or you're an equity portfolio manager, and you could whoa, is that guy doing a wheelie on the Vespa? So if you were an equity portfolio manager right now, and you could tell your clients, you know what, clients, our projection is that the S&P 500 over the next 12 months could return a modest 4%. However, if we log on to Treasury Direct, which is where you purchase treasuries, we can purchase 1-year treasury notes for you that will yield you a risk-free rate of return of 5%. I mean, think about that for a moment. This is Rockefeller Center. So right now, and I'm using risk-free in air quotes because what do we have going on right now? The debt ceiling, that is one of the biggest risk factors, which I don't think is going to happen, but we need to talk about it anyway. The US could default on its debt obligations. I don't think that's going to happen, but generally speaking, if you buy a US Treasury, it's considered a risk-free rate of return because the US has never defaulted on its debt obligations. The United States pays its bills. So after the COVID pandemic, after all of this crazy nonsense, after all of this major stock market volatility, now if you look at the S&P 500 right now, everybody, we are literally trading at the same price levels that we did 2 years ago. So the S&P 500 has been in this choppy range, up and down, up and down, up and down, super volatile for almost 2 years. So as an investor, you're like, do I really want to get involved in that when I could just, plow $1 million into 1-year treasuries and make myself $50,000 risk-free? That's going to be a big impact. And I think that's also going to impact the real estate market. Why would I purchase a piece of property and have to deal with the tenants, have to deal with the property management, have to deal with fixing up, and making all the repairs to the property when I could just park my money in US Treasuries right now, especially a 1-year Treasury at 5%. I don't know, any thoughts on that? Hey, Justin S. has just opened a high-yield savings account last night to move some money that I had to get a better APR. Very nice. Has anybody in the chat tried out Apple's brand new bank account? So Apple teamed up with Goldman Sachs to offer a savings account that I think is yielding 4.5%. Has anybody tried that out or opened it up yet? Hey, Sparks Carnival, says Tom, thoughts on the Apple getting into the finance? Yes. So here's something interesting, Sparks Carnival. I think I'm actually going to open that account and try it out. And I'll tell you why. Right now, I bank with JP Morgan Chase, right? I do business banking there. But here's my prediction for Apple. My prediction for Apple is that it is going to continue to push its way into not only retail banking, but corporate and business banking. And the reason why I say that is because I always use the terminology follow the money, but I'm going to change that up a little bit, and I'm going to use the term follow the infrastructure. And the reason why I use Apple products is because everything is in one place. Apple is so good at building a fundamental ecosystem where I never have to go to anywhere else. I use the roller skating rink, by the way. Now, during the summer, for those non-New Yorkers that are watching the live stream, that never used to be a roller skating rink. That only happened after the pandemic. And the thought process there is they need to do things that are fun and exciting to get people back to Rockefeller Center. Because nobody's coming back into the office, everything is vacant. So they need to get creative on ways to bring people back. And I think people are making a big focus, or the developers are making a big focus on hospitality. Seems to be working. Seems to be a lot of people out there today. All right, I guess we'll make a right here, but we always buffer. There's a huge buffer spot here. Hey, Sparks Carnival says Roblox is up 42% year to date. They had a red hot start. Hold on, let me read. Red hot start, but are warning of a slowdown. Anybody has kids in the comment section here? And do the kids play Roblox? Because I was pitched on that too. One of my good friends owns a lot of that company. But I sort of think about those type of games as fads, right? I mean, I remember when I was growing up, everybody would play the Super Mario games, and then it goes away, and then it comes back, and then it goes away. It doesn't really have any staying power. So for me, when I look for an investment, I like to look for something that's timeless and that people are going to use all the time. I don't know if the kids are going to want to use Roblox all the time. Maybe the game goes away in 5 years. Who knows? Alex says my kids play Roblox and Minecraft. Hey, Hang with Mark Mom says, yep, my kids grew up with Roblox. Wow. Interesting. I don't know, maybe I'll have to look into it a little bit more.
Did you have fun?
Now we're coming up on the News Corp building. You can actually see the ticker tape going by right here. Oh, look at this. Speaking of CDs, we were just talking about interest rates. CD specials at First Republic Bank, 4.95%. I couldn't see what it said, but anyway, you guys get the point. Interest rates are going up. First Republic Bank went under. I think they got bought out by Jamie Dimon, which their investor day was yesterday, by the way. JP Morgan Chase investor day was here in New York just yesterday. Hey, Kanar Bar says, hey, Tom and everybody. Good to see you. You're right on time. We are walking down 6th Avenue. We are going to head towards the Flatiron building in the Flatiron district tonight in honor of the historic sale, the auction. The Flatiron building officially has a new owner. I'll give you one look at the News Corporation building before we go. Hey, Cindy Foley's here. What's up, Cindy? Thank you for joining us. We're about to cross past the Diamond District. Now, the Diamond District is on West 47th Street in Manhattan. This is where pretty much all the celebrities, all the very notable and affluent people come to purchase jewelry. It all goes down right here in New York City's Diamond District. You can see the two sort of diamond lampposts here. But if you guys have been enjoying the live stream so far tonight, feel free to leave a like on the video and click the subscribe button if you're new. It looks like they're doing some major renovations, it looks like. Oh, I think they're redoing the sidewalks. At first it looked like somebody did a massive smash and grab and they were roping everything off. All right, let me catch up on some of the comments. Hey, MBA Elias, Tom, have you ever thought about opening a CD with a credit union? Some are offering 6%. To be honest with you, I have not, personally. But I don't think it's a bad idea at all. I mean, to MBA Elias's point, you know, that's what we were just talking about. And I think if you're a portfolio manager right now, or you know, if you're running your own family's money, or you're running clients' money, or even if you're a real estate investor, rates are starting to get attractive. And we've talked about this terminology or this acronym, TINA, T-I-N-A. There is no alternative. That's the acronym. But there actually is an alternative now, right? Because TINA was an acronym that was thrown around on Wall Street when interest rates were artificially suppressed by the Federal Reserve, right, to provide quantitative easing and stimulus to the markets. So why would I put my money in a bank, or why would I put my money in a CD that's going to have a negative rate of return when you're talking about real rates of return, right? Because you can have nominal rates and then real rates. So real rate of return is factoring in inflation. And for a long time, real rates across the curve have been negative. But now they're actually positive and they keep up with the rates of inflation. So the bond market or fixed income is actually quite attractive. I don't know, what about you? Have you thought about opening up CDs? I know Hang with Mark Mom just told us she's been moving some money there. I mean, or you could just go to Treasury Direct, right? Look at the 1-year Treasury right now, 5%, 5 handle on a 1-year Treasury. Now, in theory, right, that's supposed to bring down some of the demand for real estate, because a lot of the real estate speculation in the market has been driven by artificially suppressed rates, right? I think people tend to overcomplicate things. Wow, look at that. Is that not just an awesome shot of One Vanderbilt? Now, our good friend Smee Media in the chat, I'm not sure if she's here tonight, but Smee Media was telling us about this. I guess there's the Amex, I believe it's called the Amex Centurion Lounge? I don't know, but it's supposedly on one of the top floors of One Vanderbilt. And it's a lounge, you could go there, and it's pretty amazing. Maybe I'll try to make a reservation there and we could start one of the live streams from up there. We'll see. All of my cards are with American Express. That's who I use for credit cards and things like that. But I guess they're not credit cards, they're charge cards, because you have to pay it off at the end of the month in full. Anyway. But yeah, I mean, in theory, as rates go up, that's supposed to take some of the froth out of the real estate market. Now, if you just do the math, right, and I was sort of doing this today, if you look at the median rent in the United States, so we're talking about national averages here, right? So we're not talking about market specific, we're talking about national rents. I believe it's $1,850. Now, if you look at just the average single family home, 30-year fixed rate mortgage right now has a 7 handle on it. 7% 30-year fixed rate mortgage. If you put 20% down on a $400,000 house, your payment's going to be in the mid 2000s, right? $2,500. So the math really doesn't work, right? When you have rents that are $1,850, or you could purchase something and your payment is going to be, you know, almost $700 more than that. You know, something sort of has to budge, something sort of has to move, something has to break. All right, this is the Empire State Building. Hey, Con is here. Good to see you. Thanks for joining us as we look at the Empire State Building. Wow, really? I didn't know that. You have to spend over $50,000 to enter the Centurion Lounge? I didn't know that. Hey, Jen is here. What's up? Good to see you. Sparks Carnival says, Tom, CDs have an opportunity cost if you invest in CDs. You're not investing in growth stocks. Yeah, that's true. But I think for a lot of maybe older investors or people who are rich, right? Because there comes a point in this game, in the money game, that's actually a good book, by the way. I would highly recommend that book if you haven't read it. The book is called The Money Game. That is a must read. Anyway, but in the levels of the money game, as you get older, chances are you're in the stay rich club. Right? My friend Jim always says, because sometimes I send him, spreadsheets of ideas, like stock pitches, stock ideas. I'll say, okay, put about a quarter position in this. And he's like, sometimes he'll just email me back a one-liner. He's like, I'm in the stay rich game, I'm not in the get rich game. To sort of say, look, there's different risk profiles for different investors, right? So if you're in your 20s and you're really trying to get risk on here, and let's say you're in a bull market and you have a really good stock, it has 3 consecutive quarters of beat and raise, earnings reports both on the top and the bottom line, triple-digit sales growth, triple-digit earnings growth, 25% plus return on equity, really good pre-tax and after-tax margins, and that thing gaps up after hours on a earnings report, then yeah, you could load crazy size in that name because, hold on, let me cross here. I want to show you guys Bryant Park because we're making good time tonight. We actually made it to Bryant Park before it closes. So anyway, you can really load size in that name. It may be a more speculative bet, but you have more time to accumulate wealth. Some people, if you've done really well in business, let's say you've sold your company, you're in the stay rich game. So the people that are in the stay rich game are probably saying, wait, I can make 5% on my money by just buying a 1-year treasury? I'm in, sign me up. I don't have to deal with volatility. I don't have to deal with future pandemics that could crash the market. Sign me up, right? So I don't know. Man, Bryant Park looks amazing tonight, guys. So right behind the fountain is the Stephen Schwarzman building, the New York Public Library. Right here you have the beautiful One Vanderbilt building. And right here you can just barely see it. This is actually the top of the Chrysler building. Bryant Park is absolutely gorgeous during the spring and in the summer. Sparks Carnival says, what financial advice would you give to new college graduates? I don't know. I don't think I'm allowed to give out college advice. I don't think I'm allowed to give out financial advice. Maybe some life advice. I would just say go get a really good job. Especially in today's climate, because, I was reading a research report my friend sent me, and it was about the labor force participation rate in the age range of 19 to 35. Now, I won't give it away. I'll let you guys do some work. But do some research on the labor force participation rate for young people and tell me that there's not a huge opportunity there. So if I was graduating college, I would do nothing but, totally just work my face off 24/7, 365. And that's what I did. And I would be in the office all the time. I wouldn't do this remote work bullshit or stuff when you're young, right? Because when you're just starting out in a career, right? Let's say if you are a, first-year investment banking analyst and you're not on your desk and you're telling your managing director that you want to work remote, you're not going to last long. There's no way you're going to make it past second year. Let's say if you're an account executive, right? And you tell your sales manager, you know what? I just got this job. You just hired me, but I think I want to work remote on Monday through Friday, yeah, you're not going to last long. But if you can be the contrarian and do the opposite of what everybody's doing, you're in the office, you're the first one there, you're the last one to leave, and you just focus on making as much money as possible and saving that money, then by the time you're 28, 29, 30, maybe there's a business venture you want to start, right? And now you have the capital to do that, to deploy that capital in the marketplace, because you've been so steadfast over the last 8 years by working for a really good company, working a really good job, making connections, right? So let's say if you have a big business idea and you want to launch your own thing, well, maybe you don't need to raise money and give any of your equity away. Maybe you retain 100% of equity in your company and you could fund yourself because you were diligent and you did the right thing when you were young. The lawn is closed. But doesn't this look picture perfect? I mean, I'm not sure how this comes out on the live stream, but there's quite literally not a blade of grass out of place. This is like a golf course here. This is unreal. Now, they literally roll this out, by the way. They have the sod and they roll it out. And the reason why it's closed is because the roots have to settle into the foundation. Because in the winter, this is totally covered with the winter village at Bryant Park. There's actually an ice skating rink literally right where we're standing. But this looks great. I'm really excited for the summer. Can't wait for it. Hey, Bill is here. What's up, Bill? Just be good to everyone on every team you join. If you're young, everything is connections and relationships. I couldn't agree with you more, man. Couldn't agree with you more. And just try to do as many things as possible, right? Try as many different things as possible. And just don't compare yourself to others. The more activity you can produce, I think the better off you're going to be. So that's why I say you should be in the office. I think the misconception about working remote, if you're a managing director or if you're like an enterprise account executive who has a huge book of business, you've been doing this for 10 years, then yeah, you could work remote and you could afford to do that. But I'll tell you right now, when I got my first real sales job out of college, where I was making some substantial money, like real money, like a real job, there's no way I would have been successful in that job if I wasn't in the office every day learning from people who were absolute killers. I wouldn't have made any money. I'm telling you that up front. I would have not been successful. Now, you guys could probably see me right here if you go to the Bryant Park webcam. They record it from the top of the Bryant Park Grill, which is really beautiful, by the way. A lot of people eat outside. It's a great place to have lunch or dinner, overlooking Bryant Park and Brian Moynihan's building and Mark Benioff's building right here, Salesforce Tower, as well as Bank of America Tower. Really nice. And this is the William Cullen Bryant statue. Hang with Mark Moms like I've dined over there. How'd you like it? Hey, John is here. What's up? Says, yo, seriously, public transportation is not what it was 3 years ago. Commuting sucks. Yeah, I mean, did you guys hear what they're doing here in New York with the subways? So the pandemic has totally changed the mechanics of the commuting habits of people. So it's funny, there's more traffic on the subways on the weekends in New York, and there's less traffic during the weekdays. So totally has done a 180 and flipped the commuting habits on its head, that the MTA is actually redoing the schedule. So there's more trains on the weekend to accommodate more people, because with the hybrid work, with the remote work, people are choosing to come into the city on the weekends as like a mini staycation, right? As like an outing. So you work remote from New Jersey or Long Island or upstate New York, Rockland County, and then you come into the city on the weekends and sort of hang out and enjoy the city, which I guess it makes sense, right? Looks like there was a big event here today. Bree Grams, thank you so much. Time check. Yeah, we got a little bit of a late start. I do apologize for that. Hey, Wabi, says Tom, get yourself a headpiece like the DJ. Dead Man 5. Hilarious. Steve, thank you for joining. Appreciate it. This is the Bryant Park Hotel. Wow, line sync, says Tom, in the UK commuter train level, basically about third less of it. Yeah, and I guess some people are still a little bit freaked out about, being near people. So if you only have to come to the city 2 days a week, you're going to drive in and just expense the parking. That's what a lot of people do too. Sparks Carnival, thank you so much. Is that not the biggest mound of garbage you've ever seen in your life? This pile of trash is almost as tall as me, and I'm not joking about that. Whew, and it stinks. Now, we do have some news coming out of the New York City garbage market, but I'll put that on hold because Sparks Carnival makes a good point. Tomorrow is going to be a big day on Wall Street as it relates to NVIDIA's earnings. Let me just cross here without getting knocked off. Bank of China is down there. But yeah, you're right. So NVIDIA reports tomorrow. I think that's what everybody's going to be looking for. And I think it's very important because the trend right now that we're seeing is everybody is just foaming at the mouth for AI. Right? It's, if anything has the word AI in it, it's like investors are like have this raging thirst to just sink their claws into it and just get some exposure. Now, we talked about an interesting podcast. I'm sure you guys have all heard about it or heard of the podcast. It's called The All In Podcast, and it's with David Sachs, Chamath, Polly Hapatia, and all those guys. And Chamath said something really interesting on the last podcast. And we talked about it yesterday, but I think it's appropriate just to quickly bring it up now because tomorrow NVIDIA is reporting, and obviously the NVIDIA chips are going to be a huge driver for AI. Now, usually the way it works, the battle between Silicon Valley and Wall Street is that think back to the year 2000, the tech and telecommunications boom. Then think to 2008, 2010, the emergence of social networks, Facebook and the like, all the way up to now. Well, if you've worked for a tech company or tech and telecom, one of the things you've lived and died by, is move very fast and break things, right? Mark Zuckerberg would always say that in the office at Facebook. He would say, move fast and break things. And then you had Wall Street, very reluctant, very hesitant, sort of slowing things down. Okay, but what about profitability? And sort of being the more tame voice on the street. But now we have a total 180, right? Things are like a total 180. You have Silicon Valley and some of the best computer software engineers in the Valley saying, well, maybe we should slow this thing down. AI could potentially get out of hand and it's very disruptive. So let's sort of take a pause here for a moment and try to reevaluate what we're doing. And Elon Musk has been very outspoken about this. But Wall Street is sort of like the move fast and break things, especially if you want to talk about the VC community, venture capitalists and the like. They're just tossing gobs and gobs of money at anything that has the name AI in it. So it's an interesting dichotomy we have here, where with AI, Wall Street is all run and gun, and the people that are actually building these products and know what they're talking about are saying, hey, we gotta figure this thing out here. I think that's an interesting dichotomy we're having, and I think Chamath brings up a really good point. Hey, Oscar Diaz says, yeah, the CEO of OpenAI went to Washington to speak with the feds. TK Poor says NVIDIA will become the first $1 trillion market cap semiconductor company. Potentially. Now, for semiconductors are really going to be the lifeblood of the economy. Not just in the United States, but globally. I think it's going to be the new liquid gold. Or like oil, right? Also with data, right? Whichever company controls the most data is going to win. And the reason why I'm optimistic about it, I'm optimistic about the future, is because a lot of that innovation is coming back to North America, right? A lot of that manufacturing capacity is coming back to the United States. It's coming back to Mexico. It's coming back to Canada. I made a Twitter post about this. If you guys want to connect with us on Twitter, you could follow us at Walks Wall Street. If you want to chat during the day or something like that, we'll go to Broadway. There's a better view of the Empire. But after the C-19 pandemic, that really taught nations or the West that you can't rely on a very bifurcated supply chain. You got to bring it onshore. You got to bring the manufacturing capacity back to the United States, to Mexico, to North America. We'll just say North America in general. And that's happening in a big way. Now, speaking of that, speaking of semiconductors and chips, did anybody see the big breaking news today out of Applied Materials? Now, Applied Materials trades under the ticker symbol AMAT, AMAT. They've just announced that they're going to be investing almost $4 billion into a brand new California manufacturing facility to research. Hold on, let me cross while I got the light. To research and develop new semiconductor technology. You're seeing Intel investing billions of dollars in the building of fab in Ohio. And that is good news for the US and our NATO partners. Keith says, Tom, chip plants take years and billions to build. Agreed, they do. It's not going to be like you turn on a switch and manufacturing capacity is up and running. So Keith makes a good point. This isn't going to be an overnight thing. But better late than never, right? Better late than never. This is going to be a pretty good runway. And these are really high-paying jobs. These are good jobs to have. Would you rather have the infrastructure sitting in the hands of the CCP, or would you rather have the infrastructure sitting in the hands of the United States, sitting in the hands of Canada, sitting in the hands of Mexico? I know my answer. And this sort of reinforces the thesis that the United States is the brain drain of the world. Because chances are, if you go across the United States, really across the world in any college campus, everybody wants to work in the tech sector. Everybody wants to be, an engineer developing this technology, working on AI, working on machine learning. And all of that's going to happen here, which is good news. Ed Dunkels has agreed that we need to pivot away from Taiwan. Yeah, I mean, I agree 100%. Now, we could open up that whole can of worms. Do we think China is going to invade Taiwan? I don't think so, but you guys know my track record with geopolitical disputes. I'm 0 for 1 on that, so I'm just going to grab some bench on that and not put my insight on that. Man, the Empire State Building's looking like a freaking 10 out of 10 tonight. Looks awesome. For some reason, every time I just look up at the Empire, you just sort of get inspired to do something. But yeah, the thought is, if you look at the technologies that are going to drive or be the engine for growth in the new economy, it's going to be AI, it's going to be EVs is going to be huge, it's going to be autonomous driving, and it's going to be cloud computing and software. Right, as Mark Benioff famously coined, software is eating the world. I gotta tie my shoe, hold on. So we want that infrastructure here, hold on. Quick time out for a moment. All right. I think we're just gonna make it. We're about an hour and a half into the stream. I can't believe that. I gotta put some pep in my step so we get to the Flatiron. Ed Dunkel, what do you think about the Flatiron auction today? Yeah, Meld is like, put the camera on the ground for Walks in Wall Street rat camera. Now, Empire Realty Trust, that's who owns the Empire State Building and others. Now, we talked about two companies. I'll give you the two tickers just for some perspective. First ticker is ticker symbol SLG. It's actually a New York-based REIT, Real Estate Investment Trust. And then the next one is ticker symbol VNO, which is the Vornado Realty, which is another REIT, huge in the office space. Now, it's funny that we're talking about Vornado right now because you guys see that down there? 2 streams ago, I took you guys over to Penn Station, and they are having some problems right now because they have so much money tied up into the Penn project. And I think it's actually on hold right now. And if you look at vacancy rates in Midtown Manhattan, the area with the highest amount of vacancy just so happens to be right where we are now. So Vornado has huge investments in Penn Station. Now, if you look at office availability, it rose to 23.2% in Q1 of 2023. Just last year, it was 19.9%. So you're in an environment where you have ticker symbol VNO tied up with multi-million dollars worth of investments into revamping and revitalizing Penn Station, which they're doing a great job, by the way. I mean, that place was a total hellscape before, that it's looking good. But the problem is, who are they going to rent to? Vacancies are at all-time highs. So I don't know. But the point of bringing up those two ticker symbols is that they're trading back to the price levels from the year I was born. Put that into perspective for a moment. So when these companies IPO'd, when they had their initial public offering, they IPO'd at 23 bucks. They're trading at 23 bucks. Ticker symbol VNO is trading at $14, back to prices where it was trading at in 1993. Now, I was born in 1995, so the problem there is, imagine those shareholders, especially, you know, big managing directors. Think about if you're a big MD at these real estate investment trusts, you're probably not feeling too well right now, because as you move up the corporate ladder, especially in investment banking or in real estate, and if you work at a publicly traded company, the vast majority of your bonus is stock-based compensation. So you're not feeling too well. And I'm not saying that to try to be a jerk. I'm just saying that because, you know, we've been really monitoring this trend, and we've been really calling out this commercial real estate debacle for about a year now. And it's actually playing out almost exactly as planned. All right, Koreatown, one of my favorite places in the city. You know, this place used to be totally vacant, and it looks like they're just putting something in here now, which is good news. This all used to be drug dealing right here. All used to be derelicts, drug dealing, but they cleaned it up, and there's actually a really nice bar here, which is good news. That's what we want to see. Keith says, Tom, you haven't mentioned Palo Alto Networks or Wingstop lately. Well, Palo Alto Networks, I think, actually reports earnings tomorrow, don't they? Now, Palo Alto Networks is definitely 100% the leader in cybersecurity. Wingstop is trading near all-time record highs. I just tweeted about Wingstop 2 days ago, I think. Ticker symbol WING, W-I-N-G. Sparks Carnival says Palo Alto reported today. How did they do? I was busy today. I was all hectic. I bet they reported well. I bet they did well. Golden and Sparks Carnival. Thank you so much. I appreciate that. Thank you, thank you, thank you. Sparks Carnival, how did they report? Austin City Limits, thank you so much. I appreciate it. Sparks Carnival's shares gained 3.5% after the company's Q3 earnings report. The cybersecurity company posted EPS of $1.10 and revenue of $1.72 billion. Very good. Yeah, by far, Palo Alto Networks, ticker symbol PANW, or PAWN, always get it mixed up. That is the leader in cybersecurity by far. Now, I interviewed for a position actually not too long ago, about this time last year, at Palo Alto Networks for an enterprise account executive position. Hey, Design Ideas, thank you so much for your very kind $10 donation. I appreciate it. Thank you so much for your support. Thank you, Design Ideas. Hey, Jafet Perez, I appreciate that. Thank you. Let's get away from that guy. This is the Virgin Hotel. I think about a month ago, this was the grand opening. Bill says, we interviewed for the same position. Dude, you probably got it over me, dude. I didn't get it. I didn't get the job. Yeah, Richard Vogel, that's true. You know what? That's so funny. Bill. Yeah, we probably did interview for the same position. I didn't get it. I didn't get the job, man. I did not get the job. I think if they would have offered me the position, I would have taken that job, I think. Hey, Golden City says, what's up, Tom? OPEC Plus is meeting after a few days. Let me go back to your comment. They're saying they'll make speculators cry. Well, where's crude oil at right now? $73, something like that? I don't know. I'm really under the impression that, and I'm glad that you brought that up about crude, because did anybody see the cover story for Barron's? You know what? I think I have it. Hold on. Bear with me for a moment. Do I have it? I think I do. I just got a brand new briefcase, by the way. I've had my same briefcase since my first boss gave it to me when I got my first sales job out of college. I still had it. I wore that thing into the ground. Yeah, I do have it. Let's see. Whoops. This is it. I dropped it on the floor. But the Barron's cover story, it says, what does it say here? It says, oil prices are down, but not for long. Our roundtable experts find 10 ways to play the oil rebound. I think I'm going to be a little bit of a contrarian there. I think I'm going to be a little bit of a contrarian. I don't think that we are going to have, maybe we'll have a little bit of a bounce in oil, but I don't think it's going to go back to $130 a barrel. And if you remember correctly, March 2022, What was the Barron's cover story? I think it was like the third week of March. Anybody remember what was the Barron's cover story?
My code name.
It was a huge, like oil rig. I think it was an offshore driller, I think, if I remember the cover correctly. And it was like oil's gushing again. And all the price targets in the article were like $200 a barrel. And I'm like, this is totally the top. And we've collapsed all the way down from $130 a barrel to the 70s. So yeah, maybe if we get a little bit of a dead cat bounce or a mean reversion trade, I mean, okay. But I don't know. I don't see crude going back to the $100 level. Any thoughts there? I think that'd be interesting to take a poll in the chat. Quick impromptu Walks in Wall Street crude oil poll. Do you guys think crude oil is going back to 130? Or do you think we're going to chop around range bound here in the 70s and 80s? MBA Alliance says Toll Brothers stock is up 4% after hours today, reported good earnings. Yeah, home builders have been, I mean, we've been talking about that too. Home builders have really been outperforming, which is interesting. I mean, you wouldn't think in an environment where interest rates are rising that home builders would be outperforming. But somebody, and I can't say who, he does watch the stream, and he's actually an analyst. Hold on. Ed T says Warren Buffett added to Oxy? Okay. It's definitely not a good idea to be on the opposing trade of that. Hey, everything in Miami's here. What's up? Says, have you seen them filming the series Billions in New York City? I haven't. I have not. Now, is that a similar series to, what is it called? Succession or something? Everybody's talking about that? But no, I haven't seen it. I think I've probably seen every single episode of Law and Order filmed in 2014 and 15. They used to film it right in the college that I went to, literally. Almost every scene was shot there. So if you ever see them go into the crime labs or anything like that, or any of the scenes where they're in the office, it's not. They're in John Jay College of Criminal Justice. We're almost there, everybody. Almost there. YouTube says there's no way I haven't seen Billions. I'm not a big TV guy. I told you guys that. I'm not a big TV guy. I gotta watch it. I'm just trying to get you guys to the Flatiron building before the phone dies. This building just sold today. Big auction. Yeah, Wabi's condo sales in my area are still really strong. So, oh yeah, that's what I was gonna say. So one of the viewers is actually a really well-known analyst. He's appeared on CNBC. He never comments in the chat, but he always emails, he always watches. I noticed that. There's a lot of people who watch the stream that'll never comment in the chat, but you guys will email me, and that's kind of cool. I call you guys the shadow watchers. But anyway, so this is the way he explained it to me, because we've been talking about how the home builder sector is doing really well, and it's outperforming a lot of other sectors in the market, right? If you look at Toll Brothers, what are the other ones? Like Pulte, all the home builders, right? KB Home. He was like, you got to think about it from this perspective. You had a pandemic-induced binge on home buying due to artificially suppressed rates and everything we talk about. He's like, but you're ignoring one of the main variables, and that is supply. And if you look at the data, we've actually been underbuilding homes in the United States. So the reason why you're really not seeing home prices really crater like we thought they were is because supply is still relatively low. And a lot of the mortgages that were issued prior, or I should say after the 2008 financial crisis, were underwritten much, much better than they were prior to the financial crisis. So the default risk is very low. The vast majority of people who bought a home for their primary residence put about 20% or more down. They have really good debt to income ratios, really good loan to value ratios. So a lot of people are expecting to have a big wave of supply come onto the market due to defaults, but it's very unlikely because we have some of the lowest unemployment in American history. Now, we could argue what the real unemployment rate is, I understand, but just for argument's sake, we have some of the lowest levels of unemployment in history. We have relatively low supply, or I should say low inventory in the market. And who are the only people who could solve that problem? It's home builders, right? Home builders are going to be the people who solve this problem. So there's always going to be demand for new homes. So that's sort of one of the ways he explained it to me, is why the sector's outperforming. I don't know. Thoughts on that? Could you believe we made it? I thought I was going to get distracted the whole way down. So guys, look at this Flatiron building. This finally sold. Hey, Dr. Longus, what's up, man? It's good to see you. Thank you so much for joining us tonight. There was a major auction that took place right here today in New York City. And the gorgeous Flatiron building now has a new owner. Now here's the problem, right? We talked about how there's a big flight to Class A commercial real estate and commercial properties. This is a little bit of an awkward building. It's a very thin building, very slender building. I think there's only one tenant in here, which was actually Sprint, but it's now T-Mobile after the merger. So the vast majority of us in this stream or in the chat think that they're probably going to repurpose the building for hotels or condominiums. Hold on, I got to put the paper away. Yeah, everything in Miami says I heard it has 4 owners. Let me just cross the street. I'll get you guys a little bit closer. But look, I mean, it's in a great location. You're literally building an icon. Everybody knows what the Flatiron building is, right? Chances are, if you're a tourist, you want to come and visit, you take photos. This is probably one of the most photographed buildings in New York. It's just, the thing is, what do you do with it? That's the thing. It's like, what do you do with it? I don't know. We'll see. But I think it's pretty cool to be able to say, I own the Flatiron building. I think that's probably one of the coolest things you could say. Yeah, Steve CR says 1902. That is very old. Wendy England says it would be cool if they turned it into apartments. I'll tell you this, guys. You know, if they convert this into apartments, and there's a 1-bedroom for $3,000 or around that range, I would rent it in a heartbeat. In a heartbeat. I mean, how cool would that be to say, yeah, I live in the Flatiron building. If you have a unit on the east side of the building, pretty much anywhere, this is your view every night. Could you imagine that? So I think this is probably pretty prime for that. Now, although I don't know how they would do the conversion. I mean, we talked about the layouts and the floor plans of this building. Very awkward, very narrow, so I'm not sure how that would work, but that's not a bad idea, guys. Tons of windows. If you have an east-facing apartment, right, assuming they convert these into apartments, you literally have an unobstructed view of the Empire State Building. That'll never go away, by the way. That view will always be there because this is Madison Square Park, and you're obviously not allowed to build a building in Madison Square Park So you will always have an unobstructed view of the Empire State Building. That's a pretty good deal. Hey, J49 says you can live at the top of the world, of the Flatiron, and rule the world. Yeah, for sure. Elijah says just office space sounds fitting. Yeah, but the problem is this, right? And we sort of went over that in today's live stream. The problem is it's not a really good fit for office space. If you look at the trends, right, of what commercial space is leasing right now, it's all Class A, brand new office space. Very big, wide open spaces, very collaborative. Think about a WeWork style office space. That's what's in right now. This is not in, okay? I mean, the offices would be so narrow. It would be like going to work in the 1980s in a cubicle with everybody smoking cigarettes, giving each other lung cancer. Nobody wants that. You know, they want big, open space. So, I don't know, we'll see. I mean, I think as the weeks go on, we'll definitely be able to get more information about what they're going to do with it. I'm interested in it. I think it's so cool that we're actually seeing this in real time. These auctions play out. Now, the first auction, the guy never put down the deposit. He failed to make the $20 million good faith deposit. And now hopefully the deal will close. I mean, it's in one of the most sought after neighborhoods of the city. You have pretty much unobstructed views of all of Midtown. An amazing view of the Empire State Building. The building does not make economic sense as a commercial building anymore. It has to be residential. Yeah, I mean, hopefully they'll give the public some hints and ideas about what they're going to do with it, because, you know, this scaffolding has been on this building for probably 3 years. You can see, you know, not the best. I mean, if you leave something vacant for so long, you know, you kind of get things that are not too good going on. So we'll see. Mike 34 says the Daily News is reporting it will be apartments. I'm excited for that then. Now, the question is it going to be profitable? Because I think they purchased it for what, $161 million? Something like that. So if you buy it for $161 million, what is your renovation cost going to be in this building? Probably a lot. Kevin says they announced they're going to do residential units earlier today. Well, I hope they make some money on it. And again, you know, maybe in the future, who knows? I would definitely rent a unit in the Flatiron building, for sure. I think that would be so cool to do that. I mean, the amount of history in the building and the location. You know what? If you have the unit on the west side too, you have complete unobstructed views of the Empire State Building as well. I mean, so this is like a prime neighborhood. You know what? I'm not sure. No, you probably can't. I thought you were going to be able to see the World Trade Center, but I think it's a little bit too narrow. I think you'd have to cross the street for that. Now, hopefully tomorrow on the live stream, I'm going to be able to get you guys down to Wall Street, because I want to show you a lot of the buildings down there. I want to swing by the old Deutsche Bank. Right, we visited the brand new Deutsche Bank today. And plus, we haven't been to the New York Stock Exchange in a long time. And assuming it doesn't rain, please God, tomorrow, maybe we'll be able to make a trek over the Brooklyn Bridge or the Manhattan Bridge if it's a clear night. We'll see.
You taking the bus or what? We on the bus?
But I guess I'll head back to Penn Station. Brandon Page says, you make it seem like the world revolves around you. It does revolve around me. The world revolves around me. Jenny Trickets is where is the new smash burger? My friend showed me a photo of it. I don't know. Smash burger. I don't know what that is actually. Mel says I passed the Moynihan train hall while I was there and loved it. I think they did a good job. Beacon says 1 Wall Street was an office building converted into luxury apartments. It was, and so was 95 Wall Street. Now, I think 95 Wall Street used to be the old Citibank or Citigroup. That's a really nice building, actually. And right across the street is 110 Wall Street, where one of my first customers was, Droga 5. And Droga 5 is an advertising company. It's nice down there. We'll check it out, hopefully tomorrow. I think I may need to cut you guys loose here, because I am on 4% and I need to use my phone as the train ticket app. But I'll see you guys tomorrow. I think it was a fun stream. I appreciate you guys coming out. If you enjoyed the live stream, feel free to leave a like on the video. Click the subscribe button if you are new. We usually start these live streams at 8:30 p.m. So if you want to join us again at Walks in Wall Street, please come back tomorrow at 8:30. I'm wishing you guys a wonderful Wednesday. It's already the middle of the week. Wishing you a very prosperous and fantastic midpoint of the week. So everything in Miami, thank you so much for joining. Jay Grant, appreciate it. Austin City Limits, Love is Kind, enjoy your evening. Richard Vogel, thank you. Sparks Carnival, enjoy your evening as well. TK Porsche, God bless. Yeah, we'll talk about NVIDIA tomorrow for sure. NBA Elias, Joe Driver, Carol Brown, Stephen Bate, British Gray, Kanar Bar, Kev MC, and the Mighty Bull. Have a good night, because there's always a bull market somewhere. You just need to know where to look. And Wabi, thank you so much for your very, very kind $5 donation. All right, guys, I got to run. I'll see you tomorrow live from New York at 8:30.